India market open. I'm Samina Nalwala and joining me is Niraj and Tamanna. Guys, it is the last 4 trading days of the year. December has been fantastic. Actually, so is November. The sentiment is bullish, but I think with missing FIIs, if I may say so, with, of course, 26 December being closed in the US, so slightly muted global cues, it's going to be range-bound. No fireworks, at least today.
Very likely, but you know, the S&P 500 has had 8 straight weeks of an uptick. We've had a good run, so
we've had 7.
Even if the market corrects today, I think we can take it with both hands. It's okay.
Yeah. So it's overall the news is good as we close off 2023. It's been a fabulous last couple of months, and just a quick word on what has happened in markets overnight, the last 3 days actually, because everyone's coming off a long weekend. So 8th week of straight gains for Wall Street, as Niraj mentioned. So that has been good. The November core PCE, so this is an important figure, which is why the mood is upbeat. That's the Personal Consumption Expenditure Index, which is a figure that the Fed watches very carefully. That figure came in on Friday, and the increase in November is 0.1%, just 0.1% in line with expectations. So that entire outlook of benign inflation rates continues because of this one figure. That is why the 10-year Treasury is also steady above 3.9%. The Brent as well not showing too much of a move. There is that Red Sea fear which is easing. On the other hand, Angola has moved out of OPEC. It's going to increase production, so that's above $79 per barrel. So the global mood is good, but Niraj, over here, are we going to see a lull in volumes presumably, or stock-specific action?
Yeah, I think the mid-caps and small-caps will be active. I mean, I think the DIs will be having a field day, no FI action. We can do what we want, but you know, the point is, Friday we've seen a big up move led by Wipro. So Bank Nifty was down and Nifty IT was up, and we know that there is, I mean, the Wipro-led Nifty IT up move did help the Nifty, but banks really stuck out like a sore thumb in Friday's session. Didn't do anything. In fact, came off quite rapidly, 0.73% lower. So that is a problem. And you know, the fact that one, there is a denial on Wipro's part, and my colleague Tushar told me that when we reached out to Wipro, they have denied to us as well. So the Wipro denial might bring the stock of Wipro lower. Infosys losing their deal, and we'll talk about that, might bring Infosys slightly lower. So Nifty IT, which held the markets higher in Friday's session, might not do so today. And if banks also don't quite participate, then one doesn't know what will, except for the big boy Reliance, which has been strong. So one, a sedate start maybe to be anticipated, and very likely that, you know, this analysis done by Dr. C.K. Narayan in his weekly column as well, that the few long positions that got left in a bunch of stocks might see some unwinding at higher levels. It's the weekly expiry as well, so that's to be kept in mind. He mentions this, that what would be left over as pending longs would mostly be losing positions that have some chance to kick back, which means that in some sectors at least, which are trying to show a pullback, could we see supply at higher levels ahead of the expiry? Very likely. The only antidote to this, it is the year end. And rumor mills always have it that the year-end NAV management might come into play. Some specific stocks, therefore, might see some terrific action. So let's wait and watch if that were to happen. The one sector, though, amongst everything that we speak about is real estate. And we were looking at the last 6 month, 8 month data. The last 1 month, of course, real estate index is up some 10%, but it's just been so strong over the last 6 months. It's not funny. 1 month performance 8%. The last 6 months, every single dip has gotten bought into. And if you just look at the performance of 3 months, 6 months, 9 months for the real estate index, the returns that it has given have been pretty spectacular. So that remains that pocket that I think people would be keenly watching out for. If there are dips that come into the next 1-2 weeks ahead of the results, then that's a pocket that people are certainly looking to latch onto. So do watch out for that as well.
I'm going to add one more sector to the list, Niraj, and that is the pharma space. We did see a very good run-up on Friday. A clutch of pharma names hit their 52-week high in Friday's trade. Now it could be some paranoia surrounding the COVID scare that most states are dealing with. Diagnostic companies also had a field day in Friday's trade, and I think that rally could continue to play out in today's day of trade. One, they're defensive. Second, it's COVID. So two good enough reasons reasons for excitement and euphoria to remain for pharma counters. If we can pull some of those up, the Nifty Pharma Index itself hit a 52-week high at 16,500 in intraday trade. It did close below that, but nevertheless saw that intraday high being made. In terms of companies that did well, Piramal Pharma, if you can pull that one up, the stock gained 8% to close at a 52-week high. It has surged 16%, I believe, so far, largely in line with the index itself. Along with that, you had a few other names in the pharma space. So AstraZeneca Pharma also surged about 8% on Friday. You had JB Chemicals and Pharma, which gained 7% to make a 52-week high. Divi's Laboratory, Natco Pharma, Glenmark Pharma, Dr. Reddy's, GlaxoSmithKline, Pfizer, Alchem Labs, Aurobindo Pharma, all those counters went home with gains anywhere in the range of 1 to 3%. This came in on a day when the market sentiment on Friday was fairly quiet. So worth taking a note, pharma could continue to see some buying in today's day of trade. Well, also while Niraj mentioned that FIs will be missing in action today, Niraj, in the derivative market as well, what we've realized in the last couple of months is the DIs are the ones that are determining the direction of the markets. If we look at what we've seen historically in the last few weeks, DIs continue to go, actually have now started turning bearish. So they're the ones building short positions while FIs are actually going long in the
on the next five positions. Yes, I think the FI positioning is still long. So that is the interesting piece.
Yeah, is long, and DI position is actually turned short now in the last few weeks.
Not on Friday though. Not on Friday.
On the derivative space.
Yeah. On Friday in the cash market though, DI is bought 2100.
Yeah, but it's interesting because the FI long position, net long on the index side is still 60%, which is great. So they have been smiling all the way to the bank on the trading or the hedging side, as the case may be. But it'll be interesting to see what happens as Jan rolls out, and then eventually what happens. But India seems to be the cynosure of all eyes, as we saw on Friday as well. Natix is putting out that piece as well, so it'll be interesting.
Well, yes, it's a good-looking market. Volumes, remember, are going to be thin. GIFT Nifty is indicating to a marginally soft start in early trade this morning, keeping in line with what Asian markets are getting up to. Some markets will remain closed across Europe and the US on back of Boxing Day. It is the last 4 trading days of the year. Also, locally, a lot of the banks, a lot of the trading desks have gone off on holiday, so don't expect fireworks in today's trade. A couple of names, Niraj did allude to some of those names that will be in focus. Infosys is going to be one such company to watch out for in trade this morning. They've indicated that a global client has terminated the MOU which they signed in September 2023. Remember, Infosys entered this MOU with a potential client, or rather a client for a potential revenue inflow of $1.5 billion over a period of 15 years. We have no indication of why the MOU has been called off, but just to put this in perspective, you will see the stock reacting to this news in early hours of trade. But what you want to take note of is in F523, the annual turnover for Infosys was close to about $18.9 billion. This, if you have to look at $1.5 billion over the next 15 years, is about $100 million every year. But if you've got about 50 to 60% of the deal upfronted, you're looking at an impact of anywhere between $500 to $600 million in this year. Whether or not this is because the due diligence has failed or the setup work did not go as expected, and of course Infosys didn't qualify for this client, is anybody's guess, but the stock will be one to watch out for in today's trade. Wipro as well. This, of course, Wipro has denied on the weekend, where they categorically denied such rumors, but Sanjay Jalona is not going to be joining Wipro. Now, this is big news because the leadership of Wipro in the last couple of years has been a bit of a concern. This, of course, not garnering too well. In other news regarding Wipro, they've also taken a senior executive, Mohammad Haq, to court. The senior executive joined competition, which is Cognizant in the US, and of course has also stolen critical data from Wipro. Whether or not this is newsworthy, impact-worthy, is going to be something we'll have to watch out for. You might see the stock giving up some gains in early hours of trade on back of both those news. Another one is 197 Communications, which is the parent company of Paytm. They've reported and, of course, indicated that they are looking to laid off 1,000 employees on back of operational efficiency coming in. They have said that they're doing so to cut costs, improve margins, and would be using AI to fulfill some of the jobs in sales and marketing. Niraj, Tamanna, please weigh in on this one. I would imagine this, of course, it's negative news flow because this isn't garnered too well for employment. But in terms of what this does for the company, if you're going for a cost-efficient, cost optimization, I would imagine Paytm to react positively to this news flow.
I just wanted to add...
But maybe not. Niraj is nodding away saying can't be.
No, because Paytm has had a slew of negative news for a while, but just on the point of the employment, one of the reasons they gave, and they didn't officially say 1,000 people, they said a significant people, reports are saying 1,000, is AI efficiency turned out to be more than they expected. So there is a larger story here as we move into more and more companies adopting AI, and that whole question of jobs comes in. But I don't know. Do you think it's going to be positive?
Has been warning us about this, hasn't he?
For a while. Do you think it's positive for 197?
No, I would presume that at the opening reaction, people might just see that, is business waning? They have had this regulatory thing of below 50,000 any which ways.
Correct.
So is business winning, and is that why they have to do it? They have to ascribe a reason. They've done so. It'd be great to get in Vijay Shekhar Sharma at some point of time. We put in a request as well. But I would suspect that the stock might see a negative reaction. Let's wait and watch.
Also they've indicated that they're looking to cut 10 to 15% of the employee costs by year end. They've also gone on to say that they will add manpower to the tune of 15,000 employees in the next year. So while they're transforming their operations, like we said, sentimentally you could see a negative impact, but we'll have to wait and see what this does for the numbers and whether or not operational efficiency, if that's what the company is calling it, could impact the numbers for Paytm. Well, the stock didn't do much on Friday. Let's watch what it does in today's day of trade. But anything else that we are watching out for today?
Few stocks on the radar, and when you have a sort of long weekend, the news piles up. So good to get everything out there. Adani Power is one I would add. Its consortium, which includes Adani Power, has received a LOI from the resolution professional of Coastal Energen. So the lenders have essentially approved this resolution plan. That could be seen as a positive. Adani Green has concluded a PPA tie-up for an entire 8,000 megawatt manufacturing linked tender, and the final PPA will be supplying about 1799 megawatts solar power. It's a 25-year project. I'll quickly go through a few more. KPI Green, its subsidiary, has bagged a 1.8 megawatt solar project and raised 300 crores versus QIP. That's also a stock which has been buzzing for a while. If you look at that 1 month chart, KPI Green has definitely been in the news. Polycab is another one that I would pick up, and a whole slew of negative news there, but they have finally confirmed 2 exchanges that the Income Tax Department is continuing a search, at least as of this weekend, on some units of the company, which had taken place on 22nd as well. So maybe that overhang may continue. Just a few more. Carousel is one I want to talk about. It's wholly owned subsidiary in the US has acquired 100% membership interest of United Granite LLC, and as we speak about the real estate boom, and as Niraj has been talking about it, a company like Carousel becomes quite interesting. The pharma pack that Samina was talking about, Aurobindo and Zydus. Biocon also with some news coming in, but I'm focusing on Aurobindo because US FDA pre-approval inspection has ended with 10 observations. This is at their US-based unit. And they injected this new injectable facility from December 11th to December 22nd. Zydus as well had 6 observations coming in, but this is at the pre-approval stage. So what the company has put out is that there's no data integrity related observations and no repeat observations from the previous inspection. Just one, if I may add, is J. Kumar Infra because of a CLSA report on it. And what caught my eye is that the buy rating has been maintained, but the target price by CLSA has been increased from 385 to 720. So quite a big one. Now, these are the guys making all the metros. One of the reasons why Mumbai is dug up. But as that focus on urbanization goes, J. Kumar Infra is going to definitely be a stock to watch.
Most certainly, and will very likely show a reaction today. Yeah. So that's to be kept in mind. Just a quick, before I just come to a few other stocks, just keep in mind when it comes to Adani Green, the fresh PPA 1799, and there were board meet today for fundraising. So I think that becomes important from an Adani Green perspective as well. It'll be important to see whether there are some announcements around what kind of instruments and what kind of investors coming in, if at all that comes about. So watch out for Adani Green on that front today. Just the last set of stocks, the shipping companies will be in focus because Maersk has said that it's preparing to resume the routes through the Red Sea. So watch out for the shipping companies. They were down in some of the Asian markets that were operational yesterday. I'm very interested to see if SCI and some of the others come off a little bit in the session today. Adani Wilmar, promoters are looking to sell about 1.24% stake in the company as per a Bloomberg article. Now, the process will be completed by Jan 31st in one or more tranches. So no immediate pressure, but watch out for Adani Wilmar. So that is the other one. There is a Bloomberg report citing Economic Times on possibly TV18 Network 18 because they say that Reliance and Walt Disney have signed a non-binding term sheet last week to merge the India media operations. Does it have an impact on TV18 and Network 18? Let's wait and watch. Watch out for that. Watch out for Century Ply, the last one on my radar. The company's largest integrated wood panel manufacturing facility has been inaugurated. That will add to some revenues, I reckon, for Century Ply in Q4 at the very least. So that's to be watched out for. But principally, from the looks of it, because it's a very heavy news flow there, Infosys and Wipro, certainly. Adani Green, Adani Power, very certainly. And then some of these pharma stocks might be the ones in focus. Biocon is a very small deal, and which is why we haven't quite mentioned it.
I'll just pad those up with something else that we need to watch out for. You've got all those IPOs, important ones. Three listings in today's day of trade. So watch out for those. Quick mention on what we're expecting. Muthoot Microfinance IPO, they had a decent interest from investors, are expected to list with marginal gains. No runaway sort of opening is expected for Muthoot Microfinance. What is eye-catching is going to be Motisan Jewelers. That, of course, got subscribed in minutes of opening in terms of fundraising plans. They are the grey market premium is about 100%, so you're expecting a stellar listing for Motisan Jewelers. We will talk to the management over the course of the next couple of hours. Lots of questions that investors would have on this one, but nevertheless an important opening to catch in today's day of trade. Suraj Estate, they received a decent response too from investors. It has remained steady in the grey market post closure of its subscription. You are expecting a 15 to 20 rupees premium, which means that the stock should list anywhere in the range of 375 to 380 odd rupees. So three listings. Muthoot is supposed to be marginally higher. Motisan is going to have a stellar debut, and Suraj should see a gain of about 5 to 6% in opening. A
couple of ones which are open, Azad and Innova CapTap. So Azad Engineering was already subscribed 80 times on day 3. Innova CapTap was subscribed about 3.5 times on day 2, but we'll see how that builds up. The big one coming over the weekend, and a story we broke first on NDTV Profit, was Ola. And that's going to be the first auto space IPO in about 2 decades. And that's something that you're also discussing on Editor's Cut today?
Yeah, well, actually, Motisans is something that we will also bring in on the floor. And then what we'll try and talk about is commercial real estate, Tamanna, because while we're talking about real estate having a great run, it'll be interesting to see what happens there. But Agam, take it away. What do we have on the Editor's Cut? What's the focus?
Absolutely, yeah. So, well, we're coming off from the long weekend, and we have, in fact, 2 very important and very interesting subjects that we're going to talk about. One, of course, is the entire real estate sector, specifically in this case, the commercial real estate leasing activity, which has picked up substantially. And then, of course, we have Motisans, as our colleagues have already mentioned, well, getting oversubscribed within minutes. We're going to talk about that one as well. But let's start off with commercial realty, Niraj. I believe we've hit another record of sorts for the quarter gone by.
Yeah, well, we're talking about real estate and residential and the launches that are happening. This one kind of, slips under the radar. But I'm referring to a Collier's note here, and they've put out some data yesterday. So they say, and the crux out here is that commercial real estate seems to be doing really well. Look at the numbers, guys. All right. Q4, which is October to December, Q4 recorded 20.2 million square feet of gross absorption, which is the highest ever quarterly leasing activity. Now we're talking about people buying real estate, but this shows that companies are renting real estate at a very, very large and a fast clip. Yeah. So that's part one. And the larger portion, they've given data for the top 6 cities, by the way. Predominantly, they've focused on that. Bengaluru, Chennai, Hyderabad. the best ever quarterly performance for them since the COVID-19 pandemic. For 2023 at large, Bengaluru drives the best performance, over 1/4 share in leasing activity. Doesn't surprise, the tech capital of the country. But Delhi NCR is not behind, and Chennai are also about 1/5 of the market share in the gross leasing. So effectively, we're seeing the commercial activity split between South India predominantly and Delhi NCR. Maybe Pune steps in a little bit. Mumbai MMR, commercial real estate leasing, is missing. The reason I'm bringing this up is because when we're thinking of commercial and players in the commercial activity, you therefore try to look at companies which are in the leasing market in those pockets, and I'll come to that as well. But here's the data that Colliers has given out, guys. Look at the demand in million square feet for Q4 23 versus Q4 22, and look at the YOY change that has come in. Chennai and Pune is a small base, maybe Chennai too, but look at Chennai. Q4 2023, the demand, 4.3 million square feet versus 1 million in Q4. Yeah. Massive leasing happening in that market. Now try and figure out which are the companies which are active in that market. You get the Brigades of the world, maybe some of the others.
Did you get any sector-specific action in this?
Yeah. So I'm coming to that as well. So, but just the numbers first. So Bengaluru continues 5.5, very large, 58% jump. Chennai 339%, Delhi NCR 61%. So the Max Estates, DLFs of the world come into play. Hyderabad 57%, Mumbai 87%, and Pune about 100 odd %. So massive uptick, and Pan India too has seen about 92%. So the crux is, this certainly means that global companies and Indian companies are taking up office space at a large clip, and which is actually great. And the fact that it's happened in Q4 augurs well for 2024 as well, right? Because there will be some spillovers that will probably come into play as well. Right. And I'll come to the point that you mentioned, Sajid, just before that. Factors that might be leading to this, and please debate out here, guys, if you want to. But people say that a large pool of talent available in India, so therefore, companies don't mind setting up these large office spaces in the country. Low-cost rentals, Indian rentals, very cheap relative to Hong Kong, Singapore, what have you, with reason, but low-cost rentals available, and adequate grade A development. Some of these companies have built office spaces. The office space that we are in, right, it's grade A. You can't find a fault. This is comparable to almost any that you will get in any of the other countries around the world. So adequate grade A development out there. India being seen favorably globally from a geopolitical angle as well. China +1, but India is a favored destination, so that's part 2. And global capability centers, when we say GCCs on the graphics, global capability centers, which are large companies, have resumed the expansionary activities. In Q4, they have driven over 50% of the demand. Right. GCCs alone, and half of the large deals which achieved closure in Q4 were accounted for by GCC. And therefore, that augurs well for 2024. Now, what is the point that you were mentioning, Sajid?
I'm talking about which are the sectors which are taking up this real estate.
Obviously, tech is very, very large.
Which basically means that the work from home or the hybrid model is now getting converted to work from office.
Yes.
And so the demand for office spaces are going up. Right?
You could argue, yes. So that is certainly one part. And the Colliers report, of course, has data of what some of the other buckets are. So I'll pull that up for you since you mentioned that, Ajit, but it's an interesting point about the sectors. The top 5 deals that happened, there was BFSI, Bank of America did a deal, Shell. So therefore, it's not just restricted to Shell. Yeah. Yes, Wells Fargo, BFSI, engineering and manufacturing and BFSI effectively have taken most of the things. Tech, unfortunately, is reduced in size, even though it still stays higher. And therefore, why we brought this up on Editor's Cut, look at what's happening to REITs. Embassy, Brookfield, Mindspace, what have you. You clearly see traction there because you presume that they are the dominant players there. But the other listed players, DLF, Brigade, and we'll be talking to the management, of course, but they have mentioned this, that they are getting larger in this space. Prestige has mentioned that after they sold off that portfolio to Blackstone, they want to come back in hospitality and office space as well. And there are NCR players which are talking about Anantraj, Max Estates, etc. talking about this as well.
Have you mentioned anything about the yields, whether they have gone up or they've remained the same?
No, not really. Not mentioned in this note per se. So not the financial detail of what kind of yields have these been locked at, but suffice to say large office space getting absorbed augurs well for some of the listed players.
And by the way, FY 23-24, we're supposed to see a lot of commercial real estate coming on into the market because they were completing.
So let's wait and watch. Absorption is high, which is good. But
so we've come a long way from a lot of companies giving up commercial realty at one point in time because they wanted to adopt the work from home and the hybrid model. And here we are in fact seeing record activity when it comes to leasing. So things certainly have changed over the past 3 years, but that's as far as commercial real estate is concerned and leasing goes. We move on to the primary market now, and a new listing today that we have on the charts, and that's Motison's jewelry. Well, it did get massive amount of subscription, but there are also some concerns, some risks which come into play. So, Ajit.
It's a 390 odd crore company in terms of market value at the upper end of the price band. But it's a jewelry company based out of Jaipur with 4 showrooms and 2 manufacturing units. But it raises a lot of red flags from anyone, because in the anchor book I didn't see a single mutual fund participating in it. There were 2 foreign funds who were Mauritius-based funds which were participating as anchors there, where they raised around 36 odd crores from these things. 99 or 0.8% of revenues come from trading of jewelry, which basically means that they order somewhere, it comes in and they sell. So it's a trading. Job work is hardly 4%. Manufacturing is hardly anything. It's negligible. All the 4 showrooms and 2 manufacturing units are promoter owned, and they have a related party transaction wherein they are paying rent to these when the manufacturing facilities are unutilized for both of them. I had asked them during the IPO why they are keeping the manufacturing unit, because they're paying the money from the company. But they didn't have an answer for that. That's one thing which is there. The other interesting thing is that they're trying to pay off borrowings of banks, which is roughly around 58 crores, and augmenting their working capital. But the borrowings they're paying are at a lower cost, 8.58% average, while they've taken money from the promoters at 11.6%. Now, they're not paying off that money, but they're paying off the bank and financial institution money which is there. And the working capital which is there is to get more trading volumes in, which is there, which is different from a traditional retail jeweler which we have seen, right? And I don't think they articulated enough to say that, we are going to go beyond Jaipur to other cities. They were pretty much happy being in Jaipur.
Right. So, I just have a quick question here. When you said that most of the revenues of this company come from trading, that means while your revenues will be large, your margins may not be. And usually they're sub 5% in general. In this case, your EBITDA margins stand at over 13% minimum.
Yeah.
So how is this that this numbers come through?
So, they are into this kundans and studded jewelry, which is more prevalent in the Rajasthan area. And that's where the margins are higher. So, for a traditional retail jeweler, it would be at 20% plus, but they're getting 13% because they have the designs, that's they say, and they use the design to get it manufactured from 5 or 6 other jewelers across the country, and they get it and they sell it. So they are sitting on a 13 to 14% margin on an EBITDA level, which is there. Now, it looks very surprising because that's a model then which anyone can replicate, but I don't know how sustainable this model is going forward for a company.
Just wondering, Sajid, any other major red flags?
Yeah, the promoters were involved in betting, but which has been disposed of now, as of now. But there is ongoing investigation of SEBI and CBI, which is going for some of the promoter and promoter entities. That would is an ongoing process, and since we are in a disclosure-based regime, you can disclose it and you can come out with an IPO as long as you have been very transparent in the RHP.
Right. Well, it does tend to make you think about how even such companies do get such high subscription matter of minutes.
159 times.
It'd be lovely to hear from the management today then.
Yeah. Yes, absolutely. And of course, we'll continue to give you an update on the same.
I believe we'll have a management conversation today?
Yes, they will going to be.
Okay, perfect.
So there you have it. Well, we will be asking the management these questions. But, that's what we have in terms of the editor's cut this morning. We slip into a short break, but on the other side, full tilt towards the market. Stay tuned in.
Welcome back. You're watching India Market Open. Let's take a look at the top headlines at this hour. FPIs invest over 57,000 crore rupees in the Indian market. They've set a new record. And they've taken the Nifty and Sensex to new highs. The booming IPO market is set to end the year with a bang. 3 IPOs list today. Ola Electric files for an IPO, plans to raise 7,000 crore rupees. The EV maker is eyeing a valuation of over $7 billion. And Paytm fires 1,000 employees, citing AI-powered automation to do their job. Shipping stocks continue to be in focus today as Red Sea route could reopen soon. Maersk is set to resume operations under U.S. protection. All right, let's take a quick look at the Gift Nifty before we move ahead and keep an eye on the F&O data. What kind of a start are we setting up for this morning? And yeah, we're looking at an implied open of a pretty flat kind of a start, not too much action there, but the action is in the F&O space today, Agam.
Yes, it is. And what's happened last Friday is that a lot of traders took that opportunity to go ahead and square off their positions as they moved into the long Christmas weekend, and that's very evident in the kind of numbers that we're seeing with respect to what's happening in the index futures. The Nifty spot did advance by around 0.5%, but we saw about a short covering even as the open interest declined by as much as 9%, which does show that perhaps in the last 4 trading days of this year, we may not see too much traction. And the picture is not very different when it comes to the Bank Nifty either. So the Bank Nifty has also seen a 17% decline in open interest, indicating that a lot of traders squared off their positions, even as the spot didn't move too much. Sure, it did see a little bit more weakness as compared to the Nifty. Now, how has the options market panned out? As far as the Nifty goes, while we did see some gains coming through, we also saw consequently a little more writing around puts. Around 21,200, 300, 400 puts seeing written. Based on that, what kind of a range are we expecting when it comes to open interest distribution? Well, for now, we have max OI in the 21,000 put, as you can see here, and the 21,500 call. So it's a 500-point range that the markets are likely to close within and trade within over the course of the next at least 3 days, because your monthly expiries come on Thursday. That said, today we are also looking at the Fin Nifty weekly options expiry. So what are we keeping an eye on? Well, a lot more coming through as far as calls are concerned, and not too much to speak for when it comes to puts. So for now, perhaps we will be watching out for 21,300, 21,400, where we do have a little bit more of an addition as far as the puts are concerned. So keep an eye on that one as we move into trade today. And Fin Nifty, of course, will be in focus, and because of that, a lot of banking names will also be in the spotlight. That said, what are our market experts making of these cues as we move into trade over the course of the next few days? Well, let's get in Ajit Rambhia of Ajira Ventures, who joins us on the show at the moment. Ajit, good morning, and thank you so much for joining in. I'm going to take your view, as usual, on the markets right at the start. How are you expecting them to trade, and what would you do?
Good morning, Adam. Thanks for having me on the show. Merry Christmas to you and all the viewers. Yeah, the Indian market has been showing tremendous growth. As expected, we witnessed a small correction last week, last Wednesday. Now, from here on, we think that the markets and the major indices will try to consolidate and maintain their levels for some time. As we move closer to the monthly expiry, in Nifty, we have a resistance at around 21,550 and support at around 20,950. And in Bank Nifty, we have a resistance at around 48,100 and support at around 46,900 levels. Just keep in mind that a breakout or breakdown from these levels might set the stage for a fresh direction in the market.
Okay, so these are the levels that we're watching out for when it comes to the Nifty and the Bank Nifty. Ajit, we've been talking about Lotus Labs a lot over the course of the last 1 week because it has been in the news. It has seen a substantial amount of updates coming through, because of which the stock has also been very active in terms of volumes. What are your observations on Lotus Labs, and how are you playing options here?
Yeah, we are extremely bullish on Lotus Labs. The current market price, like Gen Futures, is trading at around 419. We have found a breakout after a long consolidation We have a target, immediate target, so a 15 days target of around 450 plus. So we can initiate a strategy, a January expiry strategy. So we buy one January future at 419 rupees, whereby we sell one January 450 call, which is the target, at 11 rupees 55 paise. And again, we hedge it, like we save ourselves by buying one January 390 put, which is placed at around 9 rupees. So the beauty of this strategy is that our stop loss and targets are well defined, and hopefully we capture the full trend by initiating our strategy.
Okay, so well, positive and bullish stance there, and of course you are using the call to go ahead and hedge your position. That's why you're going ahead and selling that call. So positive as far as Laurus Lab is concerned, and of course we're also looking at long futures with respect to Laurus Labs in the positive direction. But you also have a view on Coal India. Ajit, can you take us through that as well?
Coal India is a trending counter. We can expect a moderate bullish trend to continue. We have a target of around 380 for this counter by this expiry. For this counter, we initiate a butterfly strategy for this expiry itself. We buy one December 365 call, which is an ATM call at 6 rupees 95 paise. We sell two December 380 calls, which is our target price, at around 80 paise. And by selling two calls, we have to hedge it. So we hedge it with one 395 call by buying that one 395 call at 35 paise. So the cost of this strategy is just 2 rupees 70 paise, and the maximum profit that can be incurred is 12 rupees 30 paise. So the risk to reward ratio is around 1:5.
All right, that's a substantial risk to reward ratio for the strategy that Ajit is playing as far as Coal India is concerned, and so we continue to keep an eye on that one as well. But on that note, Ajit, I'd like to take a moment to thank you for taking us through your views on the markets as well as giving us these trading ideas. And with that, it's over to you, Samina.
Thank you, Agam, for that. That was, of course, trading ideas coming in from our guests, and, of course, Agam breaking it down in the F&O space too. GIFT Nifty indicating to a slightly higher start. We're expecting it to be a range-bound session. Remember, volumes will remain thin in today's day of trade. Positive bias, though, is what we're expecting. Couple of sectors you want to watch out for, so keep an eye out for pharma stocks. IT will be in focus, but there could be some selling pressure for some of the high IT heavyweights as well. But while the benchmark may remain quiet, like I said, there'll be a lot of stocks that will be in focus today, from KPI Green, which ended with a 3% gain on Friday, and Century Ply for a launch of their new plant. We've got Anushi standing by with more details on that. Anushi, the benchmark is expected to remain quiet, but there are going to be lots of stocks that will be in focus today.
Right. So we have 4 stocks that are going to be on our watch list today. The first being the KPI Green, as you mentioned, it winning about 1.8 megawatts of solar power project, and because of which the stock was trending higher on the Friday session as well. So with this, the company has about a cumulative order wins of 151 megawatts in its solar projects under the CPP segment, and with just about 45 plus megawatt addition in the H2 of FY24. Now, if you look at the order book, that stood about 541 megawatt by the end of H1 FY24, whereas the company is projecting about installation of about 1 gigawatt by 2025. But the focal point over here is the recent fundraise which took place of about 300 crore, wherein the issue price was set at rupees 1,183 against the floor price of rupees 1,245. So key names that have come out over here is first being the Quant Mutual Fund, gaining about 17.01% stake of the total issue size. Then there is Bengal Finance and Investment and Morgan Stanley in the 10 to 13% range, along with the likes of SBI General Insurance, Society General, GM and ITI trading with in the 3 to 6% range. So that was on KPI. Now moving on to next, we have Century Plyboard, which opened its wood manufacturing plant in Andhra Pradesh. This was at an investment cost of rupees 950 crore. with the company's laminate presses already being in operation, whereas its MDF and PVC units are under advanced stages of completion. So with this, we can expect about another 1,000 crore of investment in the second phase. The company's aim is to expand its MDF capacity to 6,27,000 cubic meters, which is almost double of what it was pre-expansion. And the laminates is going to increase from 8.77 million sheets to 9.65 million sheets. So this is all in bodes well for the company's growth outlook that it has projected, wherein it expects about 10% revenue growth for FY24 and about 25% volume growth for its MDF, which is the medium density fiber board. Now next we also have the likes of Paytm, wherein the company has fired about 1,000 people with the implementation of AI that it is doing. So with AI, the company aims to reduce its cost and save about 10 to 15% of its employee costs going forward, along with its aim to turn cash flow positive. The company also added that this was to drive more efficiency and eliminate repetitive tasks and rules. So with this, the company also did mention for its core payment business, it sees about addition of about 15,000 more in the coming year. Now lastly, we have the like of Adani Power, which has received a letter of intent to buy the coastal energy from its creditors. So just to give a backdrop on what was happening over here is the SBI-led consortium had provided loans to the coastal energy to set up a manufacturing thermal power plant in Tamil Nadu of about 1,200 megawatts. So however, due to several project delays and cost overruns, if you look at the original cost, that scaled up to about 7,800 crore, with the debt almost doubling down to 6,200 crore. So with this, SBI-led consortium had filed an insolvency process against the company, wherein if you look at the settlement, the company's coal and oil group had Mushiara had offered a settlement of about 5,800 crores, out of which 2,300 crores was settled.
Right. Anushi, stay with us. I believe we've got a couple of brokerage calls as well. But another sector that we've talked about in the early minutes of today's show has been the pharma pack. They will remain in focus today as well. Biocon, I believe, partners with Sandoz for the Japan market. And USFD inspects Aurobindo Pharma's New Jersey-based facility. And Zydus as well, their Ahmedabad facility, both received 10 observations and 6 observations respectively. We've got with us Varsha, who's standing by with more details on this. Varsha, what does this mean for these companies and how would this impact the stocks?
Good morning, Samina. So as you rightly said, the pharma companies will be in focus today. So starting with Biocon, wherein Biocon Biologics, which is a subsidiary of this company, has signed distribution agreement with Sandoz in Japan. Now Sandoz will have exclusive rights to sell a drug or injection called Adalimumab, which is actually used for immune-related diseases. Now what this means for Biocon Biologics is this injection has a global market size of almost $20 billion, and Japan has almost 5 to 6% of this global market size. So if you see, market opportunity will actually reduce to almost $500 million because this injection is off patent and there will be 50 to 60% of the price erosion. Now assuming 10% market share in Japan, so the total market size opportunity for Biocon would be almost $50 million. But now they have to share this profit with Sandoz also, which ultimately bring down its revenue to almost 10 to $15 million for Biocon. Then next we have Zydus Life Sciences, where it receives 6 observations in its API facility in Ahmedabad. Now if warning letter, so what this means for Zydus is, if warning letter comes up, this will actually affect their formulation business, because all of this API is used for captive consumption, which is used in the making of formulations. Now API contribution to total revenue is almost 3%, was 3% in Q2 FY24. Now there are 4 DMFs of this side under approval with US FDA. Then we have Aurobindo Pharma, where it receives 10 observations after conducting a pre-approval inspection at its wholly subsidiary Igua Manufacturing at New Jersey. Now, if you see, inspection was conducted between December 11 to 22, and this facility is yet to start the commercial operations. So, observation may extend the plant monetization timelines for this facility. Also, if you see, Igua Specialty Chemical has almost 156 ANDA approvals and awaiting 59 approvals. And lastly, if you see, they aim to reach almost $650 million of global ESPG revenues by FY24.
All right, thank you for that, Varsha. I'm going back to Anushi, and we're just looking at all the stocks that are buzzing this morning. CLSA has now maintained a buy rating on J. Kumar Infra and raised the target price from 385 rupees to 720 rupees. Anushi has more details.
Right, Tamanna. If you look at J. Kumar's Infra current market price, it is about a 46% upside, which is quite significant. Now, the CLSA has given out certain key highlights, which I would like to point out. The first being the strong urbanization orders that the company has been seeing of about rupees 88 billion, and so further on capex plans that it envisions to make. So that is one on that. So another key trends that it is looking from more orders is its large order wins, as it focuses more on the decarbonization, and the metro rail and complex urban projects is going to be another factor that is going to benefit the company. So now with this, the company, CLSA expects J. Kumar EPS to see about a 25% CAGR growth over the FY24 to 26 period, which is much higher than the consensus estimates, and with the new orders that it is seeing, it is going to support this sort of EPS growth. So with this, you can see a more upside.
Okay, we shall watch out for J. Kumar Infra as well as all the other stocks in news that were mentioned. 3 pharma names. Let's see if there are negative impacts on a couple of them. And, of course, all the others that came about, including the investor list of KPI Green. But what about markets at large? Let's get in our guests. Akshay Bhagwat, Senior VP JM Financial Services, joins us right now to talk about what the tech end of the market could look like. Akshay, good having you. Thanks for taking the time out. We had a good day on Friday, but suffice to say, Nifty IT may not be at its best today. And if banking sulks, can we keep up with the optimism? Would you be long today for today or the next few days?
Good morning. Thanks for having me on the show. Well, see, if you look at the technical parameters, firstly on the Nifty index, we have seen a good relief rally in the last couple of trading sessions. So if you look at the sell-off which we had last Wednesday, we have recovered almost 50% of the losses which we saw on a single day. So 61.8% is a special number for me. It's a Fibonacci number, and I would like the Nifty to sustain above the 21,400 mark. That would be the first sign that the market is gaining strength. Broadly, the buying strength has been good at the base of 21,000. The FIIs have been buyers both in stocks and index futures, so that's a positive news. But from a technical perspective, if I were to time the entry, I would be more comfortable if Nifty sustains about 21,400. Today, being after the year ending, normally the volumes stay a bit dull. So the chances are that Nifty might be a bit subdued till it trades below 21,400. So the buying levels for me is 21,300 on dips, or if it sustains about 21,400. But I continue to maintain a positive view in the market. I'm expecting the all-time highs to be tested in the month of January very soon.
Yeah. Let's also welcome Vinit Bolinjkar to the show this morning. He is HR Ventura Securities. Vinit, a very good morning to you. Low volumes expected all round, but what would be your strategy on a day like today? Do you think that the play would be more stock specific, and are you worried about the news coming in from Infosys?
It's bringing to fore my fears, which I've always had throughout the year, I've always maintained to be underweight IT, and I've not been wrong about that. So I guess that, the order cancellations is, although it may seem like a one-off for Infosys, but I think it could be the trend going forward for all the IT stocks in comparison. So IT is a sector, principally we've been saying to be on the, sidelines completely. And there would have been several stocks where we missed out the rally. But we've definitely made up for that in the sense that we have been long the rest of the market except IT. And, we continue with this view going into 24. And the first quarter of 24 could be very, very bearish for IT. I have a few reasons for that. So there are just a couple of things is that the dollar debacle continues. We are seeing the dollar sell off. Second is, we expect a lot of loans to get repriced higher for a lot of corporates. And that is going to lead to several businesses which have been, born in the post-COVID era, suddenly finding themselves, with nothing to do. And, they've taken loans at practically zero rates and they'll be repriced very higher. And third is the mass layoffs that come about from this factor, as well as the factor that, your delinquencies in the US credit card markets are spilling at about 30% every year. So all these three are hitting consumption, causing job losses in sectors which we think were created in COVID, and putting pressure on the dollar because of the dollar not appreciating enough or keeping pace, which could be the outlook of all these factors. So double, triple whammies for IT stocks to be looking out for in Q1 of the new year.
Indeed, Vinit. In fact, discretionary spending has still not picked up, and we saw that with Accenture's earnings that were reported last week. Akshay, I want to come back to you on Bank Nifty, which is currently navigating in a very defined trading range. What are you doing on Bank Nifty? Would you stay on the sidelines, waiting for some clear triggers before you initiate fresh positions?
Good morning. Well, technically, look, the Bank Nifty is in a positive setup. It's just that it's about micro timing where I get the best rate to enter on the long side. Now, one thing is clear that 48,000 has a lot of call writing action in the derivative segment. And also on the prior trading session, we did note the FIS building up some short bets in the bank index in the future segment. So there can be some bit of a consolidation or a time-wise correction, which I see where Bank Nifty might be confined in a trading range of 47,000 on the lower end and 48,000 on the upper end. So to time the buy side of the Bank Nifty, since I hold a positive view, I would be more comfortable buying on dips around 47,000 from a positional perspective. In case I don't get those levels, I will wait for the Bank Nifty to cross above 48,000, sustain above it, and ultimately I'm looking for targets near 49,000 very soon. So maintain a positive view. Today, day trading session, it might be a bit subdued, might be some nervousness in the bank index, but it's a buy on dip Bank Nifty. So continue to hold a positive view on the bank index.
Okay, time for a short break. We'll be right back with the pre-open session. Stay tuned.
watching the India Market Open. We're a couple of minutes away from pre-open rates coming in. Are we going to see a flat kind of a day, volumes low, or some excitement in opening? Let me go quickly across to Vinit, Bolinjkar and Akshay, Bhagwat. Akshay, your top trades for the day before we get into the pre-open session.
Yeah, good morning. So my top trades both are on the buy side, and the first recommendation is from the FMCG pack. That's Hindustan Unilever, a very strong basing pattern seen at the level of 2,500, and this has been a sort of an underperformer in the last couple of months. And my belief is that this stock is just setting up for a good, strong launch above the 2,600 mark. Derivative parameters are positive. Technically, it's setting up for a breakout. So buy Hindustan Unilever at the current rates. You can keep a target of 26.12 and a stop loss of 2559. Second trade is in the healthcare space. It's Apollo Hospitals, which is trading in a range. So the thought is that from the base of the range, it has seen strong long additions. Technically, the broader structure is positive, and I'm targeting around 5742 in this trade. So buy Apollo Hospitals for target of 5742. Keep a stop of 5325.
All right, Apollo Hospitals and HUL on Akshay Bhagwat's radar this morning. Meanwhile, less than 40 seconds to go for a pre-open before we get into trade. Now, all eyes on IT stocks this morning. Niraj, as you were saying, IT is going to be on the radar, but beyond that, the action likely in the broader indices.
Yeah, most certainly the broader end of the spectrum. I think we'll watch out for the Adani Group stocks as well today. 3 of them in focus, so that will be interesting. But yeah, IT and banking from a larger index perspective, certainly in focus. We'll try and get in perspectives from Vinit, Bolinjkar on the fundamental side as well on some of the newsmakers, but just about 10 seconds left for the pre-open session to kickstart. Let's wait and watch if it's a sedate start or if that there is more in store that we will get in at the end of the first 8 minutes. But in the pre-open rates, and we'll of course give them a chance to settle, but let's wait and watch how we start off. Okay, that's the call that we have, but the pre-open rate, yeah, I mean, all of the plays for the Sensex in particular, doubt we'll have a 1.5% lower. So let's give these rates a chance to settle. We will keep a keen eye out for the IT names in particular. So Nifty IT, Wipro, Infosys, 3 key names that we will certainly be watching out for in the session today. Now let's talk about those newsmakers. Vinit, the quandary that people have is that, hey, here's Infosys, which won this order. They'd not started working on it. If it's a 15-year order, relative to its annual revenues, it's not a very large per annum miss that has happened. But all IT companies are a summation of a number of deals that they win. This $1.5 billion deal going away, does it hurt Infosys materially?
So it does not hit materially to Infosys because, as you mentioned, that the deal is over a 15-year period and it is just one-off, and there would be several deals that Infosys would be working on and very compensatory also. But the fact is that, this is going to be a trend that we are going to be seeing across, across the spectrum of businesses which are listed in the US. And, the US is more than 50% of India's basket of IT services. So there is always going to be concern on this.
Vinit, the other thing is Wipro had a massive up move. Now, some of the rumor mills have it that there was a talk that an ex-IT company's senior person would join the firm. Now, Wipro has denied news over the weekend. I don't know what news you had or what did you make of that up move. And I'm not asking Akshay this on purpose because the fundamentals might alter the charts today. So fundamentally, Vinit, what about Wipro?
So I think if you see the relative strength of Wipro is going to be more more stock specific, and it may hold out better than the rest of the pack. But we have to understand one thing, that this market is going to punish the stock that does badly. If you see the IT stocks historically, the stock which has done poorly in terms of quarterly numbers gets punished, while the rest of the sector, although it might trade lower in sympathy, eventually catches up. So we are going to see similar kind of things happen out here until the commentary of the sector entirely changes. So whether you should get worried right now, yes, I am worried. But it's a trend that I am looking for to play out. So, timing the trend could be a little bit difficult, but broadly, things are now falling into place, and, this frequency could increase in the Q1.
Akshay, what is your take on Wipro and Infosys? Wipro, of course, had a very solid run on Friday. It was up 6%. This morning as well, despite a little bit of negative news triggers, the counter is not looking bad in pre-open trade. It's trading flat. How would you trade Infi and Wipro if you do get a gap down on either of these counters? What would be the trade?
From a chart reading perspective, Wipro has a very strong chart structure. The prior trading session registered a very massive breakout at the levels of 440. Even if you look at the futures and options space, a lot of put writing activity picked up at the level of 460. So clearly the zone of 450, 460 odd levels is a strong support base. I would be buying Wipro on the opening trades if I get it at or around the support zone. So the view for me on Wipro is positive. The support is 450. My stop loss will be below 445, and on the upside, if the momentum resumes, you can easily see Wipro making all the way up for 485 to 490. Now, as far as Infosys goes, yes, it's going to take a knee-jerk reaction in the opening trades. It did bounce back from a strong support zone on the prior trading session at 1520, but I believe if it opens below that levels, it is more vulnerable to profit booking because of the news base. It has the negative news flow, and even on the derivative segment, the put writing base is as far as 1400 and around 1500. So I will give Infosys a miss. I will wait for things to settle down. In case you're holding Infosys, I see no reason to panic if you are positionally holding Infosys with a longer term or a medium term perspective. I believe sanity should return in the stock around the levels of around 1480 plus minus 20 odd points.
Yeah, mid-cap IT, they also performed pretty well on Friday. And look at Coforge, Persistent, Emphasis. All these stocks went home with gains of 2 to 4% each. Anything in the mid-cap IT pack that you'd look to trade?
Here, Emphasis is one stock which has a very strong technical setup. In fact, majority of the IT packs here have a good, strong technical setup. It's just that they are slightly trading in the overbought zone, so they are vulnerable to correction. But Emphasis, as I mentioned, 2600 is a strong support base. I would look for dips around 2630 odd levels to buy or accumulate Emphasis. The second is Dixon Technologies here, although it is a bit overstretched on the charts. I believe the broader chart structure is positive. So any dip around 6250, 6230 odd levels again would be exciting levels to re-enter the stock. So yes, IT is vulnerable to slight profit booking, but this should be short-lived. Look for opportunities to re-enter from a trading perspective.
All right, I just want to get your views, Vinit and Akshay, on J. Kumar Infra. Interesting note out by CLSA this morning that has maintained its buy rating and raised the target price from 385 to 720. And the rationale is quite interesting on why they like J. Kumar Infra, as the government at all levels, state and centre, focuses on urbanization, reducing traffic and pollution. The focus is on metros. They're in that business. They've got quite a meaty order to build connecting roads in Mumbai as well. Let me start with Vinit first on whether you have a view on J. Kumar Infra. Also with the point of view that going into elections, some of those orders will now dry up till the new government is in place. But they've already front-loaded a fair bit.
Yeah, so, in the case of J. Kumar, it's a specialist in, tunneling. And we're going to see a lot of this play out in the coming future as rail transport and the metro business picks up steam. In fact, there's a lot of business coming on its plate. Because there have been a lot of announcements around the Navi Mumbai airport. There are a lot of Navi Mumbai rail corridors being set up. It's virtually almost 111 kilometers. And, some of it would be underground, some of it would be aerial, lifted. And so I think they get a lot of these business which they specialize in. And that is where I believe that they will continue to get a lot of orders, and with their equipment getting sort of freed from the existing boring work that they're doing, I think there is chance of getting higher order book.
Okay. Just a quick view from Akshay on J Kumar Infra on the charts with the kind of target price that is in place.
Well, on the medium or longer term charts, clearly the chart setup is very strong. If you look at the 2015-16 high areas of 400 odd levels, these have been surpassed with a breakout. So that's a very strong development from a medium term perspective. Short term too, if you look at the volumes, there have been significant volumes at the levels of 460. Clearly, these are delivery based buying activity around the levels of 460, 470. So 460 is your support if you are trading. I look forward to targets of around 525. From a trading perspective. If you have a slightly medium to longer term view, then you can even anticipate 550 to 575 on the upside.
Got it. Vinit, you track this group closely, and we have standard disclaimer, the Adani Group owns NDTV and you're watching NDTV Profit. But Vinit, three of those names in focus, but I want to keep a special focus on Adani Green, simply because they've executed one more PPA. There is a board meet for fundraising today, and it's not just Adani Green. Concurrent to that, Inox Wind has announced some more order wins as well. So we know that the wind sector is certainly in focus. Solar is certainly in focus. Can you give us a sense of what is your view on Adani Green?
No, see, Adani Green, it was purely held back in its journey only because of the Hindenburg report. Now, once that is true, obviously what you're going to see is that they want to gallop towards their ambitious target of doing 45 gigawatts. They're currently at 8.8 actually implemented. And they say they've locked in growth for, 25 gigawatts. So with this kind of runway ahead and with the announcement of the, fundraise, I think it's a no-brainer. So this group is back on the growth trajectory. They have to put in more, the business grows only by adding capacities. And you have to only watch out for two things, order wins and fundraise. So I think with both coming together, it's very well timed. And we will be seeing these stocks settle significantly higher as we go ahead. So, there'll always be this question of whether do I buy this stock now because it seems to be slightly expensive. But, just like the previous bull run, I think people are always going to be caught up, trying to wait for the correction. So you can never buy these stocks on corrections. You have to go and, you have to be a daredevil, buy the stock and add some quantity as strategy on the upswing and wait for a correction to fill yourself up for your complete appetite. So I think that's the way to go with these stocks, and long-term extremely bullish on these counters.
Akshay, do you track the Adani companies? Any of those that you'd be looking to trade on? Adani Power, Adani Green, some of these counters are of course tracking news flow as well this morning.
Yes. So since we are discussing Adani Green, yes, the chart structure is absolutely a fantastic, strong chart of Adani Green. Weekly chart has seen a very massive breakout at the level of 1200. It has been supported by delivery-based volume action, which is mostly on the buy side. I see a possible flag and pole bullish pattern in the making, which can target around 1900 on the upside from a medium-term perspective. Even if you are a trader, this should be the stock on your watch list with a support of 1400. You can target around 1800 odd levels. So a positive view which I maintain in Adani Green. And Adani Enterprises is the other stock which I would like from the technical perspective here. Trading at the support zone of 2750. The risk reward is favorable for a good buy position at the current rates. Support is 2750, which is just around 20 odd points from where it closed. And in case it rebounds from here, you can target 3000. So Adani Green and Adani Enterprise would be the two stocks from the Adani pack, which I would recommend to buy.
Akshay, any view on RBL? RBL on the radar as the RBI appointed additional director is going to retire. Remember, Yogesh Dayal was appointed in December 2021, and it was believed the bank was going through a crisis. The RBI had to issue a clarification. He's retiring now, so that's the fundamental news. But on the charts, Akshay, any interest in RBL?
Yes. So on the charts, the chart structure is fine. On the derivatives parameters, we have seen long additions in the month of December. Some long liquidation is evident in the last couple of sessions, but I believe the stock should rebound again from the level of 260, which is a strong trading support for the December series. So yes, I would consider buying RBL from a trading perspective. 260 is the support, so 255 would be my stop loss. And I would target for the area of 300, where the highest call writing activity or the resistance base, the resistance is setting up. So 300 would be the target. 257 will be the stop loss for RBL.
Right. Thanks for that, Akshay. We've got a couple of minutes to go as we gear up for market opening. It's going to be a flat start. Remember, volumes will remain thin. Range-bound session on the index, but stock-specific trade will continue to drive the market. Stocks like Infosys, Wipro is what you want to keep on your radar from the large-cap space. Across the broader markets, a whole host of counters will be in focus, from your likes of a KPI Green to Adani Green to a whole bunch of pharma counters that had an exceptional run on Friday will continue to be in focus today as well. Banks, remember, there has been no decisive move coming in on Bank Nifty, so that space could again be something that traders will watch out for. No major initiation of long positions is expected until there's a decisive breakout on Bank Nifty as well. Flat start is what Bank Nifty is indicating too, but Niraj, I'll come to you now. It's looking like a quiet start, more or less on expected lines.
Yes, Samina, very, very likely. Quiet start. The 38 seconds left for the markets to kickstart. Akshay, if I can ask you, there are a number of stocks that have moved around in the pre-open. 10 seconds, one top call for the morning.
Well, I would look at State Bank of India. State Bank of India has seen a powerful breakout, few trading sessions back. Again, from the levels of 630, it has seen a good buying interest. Yes, so State Bank would be on my radar for buy trade in today's trading session. Okay, so PSU Bank, State Bank of India, no less, as the top call this morning from Akshay. Stay on, gentlemen. We'll just take in some opening thoughts from you before we thank you. But here's the market open this Tuesday morning, the day after Christmas, and we are starting off flat. Okay, much ado about nothing, you would have to say. Hardly any move there, but that is to be anticipated. I reckon Nifty IT could be dragging the indices a bit lower. The Bank Nifty will also come up on your screen, but it's very, very flat. Banks flat. Let's get Nifty IT if we can before we get the heat map up on the screen. Nifty IT down 1%, no surprise. Let's pull up the heat map and see the bottom half of the screen here and see if Infosys and Wipro dot that. Yes, indeed. 2.5% for Infi, 2% for Wipro, TechM, TCS, HCL Tech, LTI Mindtree too. So Nifty IT is essentially the culprit. No big shakes, but for Infi down about 2.5%, and Wipro giving up some of the gains that it had in Friday's session on expected lines. But nothing else really out there that is really standing out in trade. What about gainers? UPL fundraising announcements, 1.2% higher. There is strength in Divi's. Divi's follows up from Friday's session when it had seen long build up and about a couple of percentage points gain in addition to Laurus Labs. Divi's up about 0.5%. We're seeing strength in Tata Consumer, NTPC. Britannia, interestingly, is up about 0.7%. But largely, what is standing out? UPL, 1.38%, maybe to an extent Tata Steel, and the IT biggies on the losing side. The broader end of the spectrum, presumably, has more action, Tamanna.
Absolutely. Let's take a look at how the broader indices are doing this morning. You remember, it's called Boxing Day, but the fighters are taking a break today, especially the bulls are taking a break. A few stocks in news that we talked about. Yeah, not too much signs of life on the mid-cap 150 either. But let's take a look at what Adani Power is doing this morning. We talked about Adani Power. A consortium has received an LOI. Okay, not Adani Power, Adani Green, and standard disclosure is there, but Adani Power up after a consortium has received a LOI from the resolution professional of a company called Coastal Energen. And Adani Green also has concluded a PPA tie-up for 8,000 megawatt manufacturing linked tender. Both stocks up today in trade. I just want to look at Aurobindo Pharma. We've been tracking the pharma pack this morning, and US FDA strictures for Aurobindo Pharma, actually observations more than strictures for Auro Pharma at the US based unit, so that's 1% down. Zydus also had a couple of observations for their Ahmedabad unit, but nothing much happening there. I'll just look at KPI Green very quickly. Their subsidiary has bagged 1.8 megawatt order over there in KPI Green, up 1% in trade this morning. And J. Kumar Infra that we've been talking about after that CLSA report. Wow. Look at J. Kumar Infra in trade, up nearly 13% in trade. 702 is the target price that CLSA has set. Just I will round off with Polycab, which has been seeing negative news and not too much. I think that's pretty much priced in on the IT searches. They did talk about it to the exchanges and actually completely flat right now. Any other movers and shakers out there, Samina, this morning?
Thanks for that, Tamanna. There are a few more counters that are moving in the markets today. So Inox Wind, if you can quickly pull that one up. The stock, if it brings up on the screen, we will take you through. That is Inox Wind, 2.5% gain on that one. All Cargo Logistics, the stock rallied up on Friday on back of business restructuring. Another 7% rally coming on All Cargo Logistics. Pull up All Cargo Gati as well, because while logistics did well, Gati was down 13% on trade in Friday. Today, of course, recovering about 3% in today's session. Media counters aren't doing too badly. So Network 18 and TV 18 broadcast, both those counters are up 4.5% to 5% each. Mazgaon Docks is up about 2%. Balaji Mines, Delivery, Adani Green that we've already marked for you are some of the counters that are looking good. BEL is having a solid day of trade. A 4% rally continues on the stock this morning too. Hindustan Copper is up 2.5%. Moti Sons will be listing shortly, but along with that, the whole sector is looking pretty good. So stocks like Kalyan Jewelers is also fairly euphoric in early trade. 2% gains coming in on Kalyan Jewelers is what we are seeing. Shipping names, remember we marked that shipping activity is expected to pick up as the trouble in the Red Sea eases. So stocks from the shipping pack aren't doing too badly. So if we can pull up some of those names, we will see some movement coming in on the likes of a Great Eastern Shipping that trades with a gain of about 1.5% to 2%. Well, that is, of course, what we have on the buy side. You still have a few counters that are trading under pressure this morning. You've got stocks like Infosys off the day's low point. Niraj marked this an opening trade. Still trading weak, but not doing as badly as it did on the get-go. 2% off on Infi, Wipro, and IHCL Tech. Apart from that, if you can get the likes of a Coforge, Persistent, AstraZeneca, these are counters as well that are seeing some movement in early trade this morning. V-Guard, Suzlon are some of the few names trading with a quiet sort of bias, but all in all, it's not a bad start. The markets are trading flat. We aren't expecting fireworks in today's session. The Nifty 50 has slipped below 21,400, oscillating between gains and losses, Niraj. So not much on the benchmark. Stocks like UPL, I've got to mark that one. That's up now 10% in trade. So big move coming on UPL on the gaining side, but on the sell side, tech is weak, Niraj.
Yeah, 10 rupees, 1.6% higher for UPL, so 590. Yeah, I was surprised. I mean, 10% on UPL would have been big news, I must say.
Yeah, it would have taken the index much higher, but
Very likely
sorry.
That too. No, but that's okay. And just, we have a hospitality company coming in later today in Indian hotels, but just look at Praveg. That's a hotel company as well, Tent Hotels, and that stock was up about 6-7% in Friday's session, and Praveg is up another 6-7% today. Anyways, we'll talk about that. But first, opening thoughts from our experts. Akshay, I'll come to you first. 6 minutes done into open. On the index or any specific stock that has stood out for you?
Index is normally expected to stay dull during this phase. So it's more of an option writer's game, which I understand, going by the build-up in the futures and option space. The direction is positive, but 21,400, the level which I marked in my opening remark, that would be an important landmark for the Nifty. If it were to cross, that would set up the momentum for the next coming days. The view is positive. Banking should support. That's how I look at it. So if Bank Nifty comes to the rescue, then yes, you can anticipate some bit of buying action in intraday trade. And as far as what hits me in the morning trades, it's a dull day. I don't see frontliners participating much. I would stay with my morning recommendations. Apollo Hospital, which has picked up by over 1.5-2% heading for a breakout. So that stock which I've recommended on the morning show today can be considered as a buy bet for a target of 5750 to 5800.
Vinit, did you track the news on all cargo logistics and all cargo Gati last week? Of course, the reaction on that business restructuring was pretty sharp on all cargo logistics, which rallied up 7% on Friday, continues to do well today as well. Gati, on the other hand, declined 13% yesterday and on Friday rather, and continues to be subdued. Not sure whether this is positive or negative for stakeholders because we don't know what the listing price of this new entity is going to be. But largely speaking, business restructuring, they did the same thing a few months ago, which was, stock positive. For now, what is the call on the all cargo group companies?
Well, definitely all cargo is a veritable player in the logistics space. And we believe that it will continue to do well. I think there are initial hiccups there, primarily with Gati. But I think all cargo logistics is the stock to go with.
Cargo logistics is the stock to go with. So that is something that Vinit Bolinjkar is talking about. Now, we've spoken about the Adani Group stocks, yes. I think the other one to just focus on is Century Ply. Just pull that one up because a large facility has been inaugurated, and that's interesting. Now, that stock is not up too much, but Vinit, come in. Home improvement, real estate ancillaries this morning or yesterday, Colliers came out with a note that how commercial real estate is seeing massive demand in India. Now, my question is, if you want to play this real estate theme, Vinit, whether through developers or through ancillaries like plywood, tiles, so on and so forth, or financiers, how are you playing it? What is the better way to do it according to you?
I think finance is a no-brainer out here. That is what I will go with. Because what happens is with the real estate booming, the initial demand for the funds, then comes the construction majors, and then comes our ancillary units. So gradually you should be moving in this direction. And to my mind, Indiabulls Housing seems to be a very interesting play out here.
In Indiabulls Housing, that's interesting. What's the rationale here, Vinit?
I believe that their order book is quite subdued. They were a jet set, and with the management change, I expect more kind of focus and concentration to come out here, and we expect this stock to do well.
Okay, just a follow-up there. Akshay, to you on Indiabulls Housing Finance, simply because while Vinit mentions it fundamentally, the price volume and the delivery percentages in the last few days have been very high for Indiabulls Housing. So is it something that you would trade as well, Akshay?
Definitely, I would trade this, but I would give this trade some more time. I would take this trade on a medium-term perspective with a time horizon of around 1.5 to 2 months. Chart structure is very strong. It is trying to launch itself from a base of 160. Also, if you note, this stock mostly stays in the futures and options band segment. So there's a huge buying interest also, which I have seen in the futures segment. Yes, it's giving an opportunity to re-enter at the level of 211, 211, where it currently trades. I foresee a target till 275 on the upside. The support base is around 175.
Right. Vinit, Akshay, great having you guys here. Have a good holiday season, and we'll catch up with you hopefully soon. In the meantime,
Did I hear you say holiday season?
I am hoping that Vinit and Akshay can take some time off this week. I know we aren't going anywhere, but nevertheless, I don't think they want to see us again this week. In the interim, the markets are trading flat, so no surprises there. Stocks like UPL, Infosys, Wipro are some of the counters in focus on the large cap pack. In the broader markets, all cargo, Inox Wind, BL, SRF, Adani Green are seeing a lot of stock-specific activity. But with that, we'll take a quick break. We'll come back. Joining us on the other side is Puneet Chhatwal, MD&CEO of IHCL, to talk to us about how business is doing.